JJ the CPA, let's talk about the Employee Retention Tax Credit that came out of the CARES Act. So this is the fourth tax credit related to payroll, 3 out of the Coronavirus Relief Act, and then this one out of the CARES Act. This one is going to cover basically anyone that's out related to the crisis that didn't qualify for those other 3 categories. And basically this is the credit. This one's a lot more straightforward than the other 3, which is nice because you just take their wages times 50% and there's the credit, okay? So this is max $10,000 on wages, okay? So you pay the employee up to $10,000 in wages for these qualifying times 50%, then that would be a $5,000 tax credit, but this is max, okay? So the max is $5,000, but that is per employee. Okay, so if you have 3 employees, obviously you're gonna get, if you maxed all this out, you would get a max 15,000 credit. So this one smells better than the other 3 because we're talking about potentially this 5,000. Of course, basically you need to look at the circumstances and determine which is going to be the best credit, so to speak. But this is basically our catch-all. I really wish they would have just done this one and this one only. But anyway, so here's an example. You have an employee at $10 an hour, okay? They work 80 hours in a payroll period, right? 40 hours a week. So then they get $800. That's their compensation, right? So then the employer takes that times 50%. If this is wages that were paid and the employee was out due to the coronavirus situation, any reason they're out but getting paid. So then that employer is gonna get a $400 tax credit, okay? Then, if we look at the payroll tax credit, it's a reduction of the payroll tax that gets paid in. So it's like the other 3, okay? And reducing down the payroll tax, so you have to know what these credits are, just like the other 3, before you run payroll, so that you can tell your payroll company or your payroll person, hey, here's my credit, so we're not gonna pay in as much. And that way you're getting the benefit of the credit right then and there. So if this results in a $5,000 tax credit for a payroll period, and the amount of payroll tax that you're gonna pay in is 15 grand, you're only gonna pay in $10,000 because you have a $5,000 payroll tax credit, okay? So when you're looking at this and you go, well, JJ, is it really better than the other 3? The other 3 is, it's a credit up to $200, so it's the full amount. Well, but that's maxed at 10 days on the 511 and the 200. Now that third one, the max 200, that you get if they're out with the kiddo or the caretaker, it's a max 200 a day, and you get it up to 10,000 an employee. So of course, if you have an employee under that one, that's probably the best one because it's up to 10,000. But if you have a highly compensated employee and they're not out a long time, well, this one can come in pretty good. So it's not, well, should I do this one or that one? Basically, on the worksheet that we've put together, you've got the 4 different credits. Here's their comp, here's what they actually got paid, because remember, it has to be that they were out and they got paid, okay? And then basically go, well, what's the credit amount? And then how many days were they out? Like how much time period are we talking about? So you can't really know on the front side. So I know a couple of clients have, wanted to do some planning. So if we knew exactly, you're gonna be out for 5 days and that's it, here's the comparisons. But if you're gonna be an employer that's saying, hey, we're gonna go ahead and close out for 5 days, well, this would be your only option, because an employer can't say, we're gonna have you be out and take advantage of any of those other 3 credits unless we're in a health emergency. Here's the bottom line: before you run your payroll, you have to know what this credit is. Okay, so the next segment of this, I'm gonna go through the qualifications But when you get to the end of this video, I'm going to say, I'm going to now run you through examples. Well, I decided to do it flip-flop, okay? I'm doing this first and then the explanation second. So when you get to the end of the video and it says, I'm going to go through some examples, that's actually the end of the video because you're watching this part free. All right, hey, love it if you'd subscribe to my YouTube channel. I really appreciate it. But hey, hang on, because you have to know, how does somebody qualify for this employee retention tax credit? JJ the CPA here. Let's talk about the employee retention tax credit that came out of the CARES Act that was signed into law just this last Friday. So pretty exciting credit. It's the fourth tax credit now as it relates to employers getting a credit for paying employees that are out related to the crisis. You'll have to check out my other videos because there were already 3 existing tax credits from the Families First Coronavirus Tax Relief Act that were related to if somebody was out with COVID or symptoms or quarantine or told to quarantine at 511 a day, 10 days max. There's a second category that was in that act that is if they're caring for somebody with COVID symptoms, quarantine, or recommended to quarantine. That was a $200 max per day credit for a maximum of 10 days. And then there was a third category that came out of that Coronavirus Relief Act, which was if you have somebody home that has a son or a daughter, that's how it's written, under 18, and that employee needs to be home to care for them because the school's closed or their caretaker is unavailable, then you get a credit for that, and it's a maximum of $200 a day, $10,000 max. Also included in that was if there was a health emergency. Well, all good, all still in play, all of that we had talked about in videos and all that good stuff, we're good. The fourth credit, okay, the fourth credit that's been put into play is now out of this CARES Act. And this is basically, takes all of the gray out of it, which is if you have an employer and they've closed for the corona, okay? So whether they've elected to do it, whether they were forced to do it, whether it was, you know what, this can be safer if we should do it. If it's, I'm not making enough money, so we're gonna have to close because of the coronavirus. If that employer closed the doors for any reason, or they sent the employee home related to the coronavirus, this credit's gonna apply. So basically this is the catch-all, okay? What came out of the Families First Coronavirus Relief Act was, you know, those parameters. This is just, well, if they don't meet those 3, you get this. And so you get it if you have this or, okay? It's this or this, okay? It's not and, it's or. If you have a small business and their gross receipts is 50% less than the prior year's quarter. So, you know, quarter 2 of 2020. If at the end of quarter 2, when you look back and you compare quarter 2 of 2020 to quarter 2 of 2019, if the receipts are 50% or less when you compare, they get this credit for any employees that they sent home. And then same thing, they will continue to get that credit as long as they're paying employees, right? Until their gross receipts for 2020 are 80% of what it is in the prior year. So if you're stuck here, you keep getting the credit until you rise up above, not back to 100, but at the 80%. So basically, if you're in a circumstance and you know this quarter 2, you did 10,000. Quarter 2 of 2019, you did 30,000. Well, you've had a more than 50% drop. So paying your employees throughout that time period when your gross receipts are down because of the coronavirus, then you're in a circumstance where you're going to get this credit, which I'm going to walk through. Once you're getting the credit, right? Okay, you're getting it. Well, how long do you get it? Okay, that's not forever. All this stuff runs out at the end of 2020. But when you then get your gross receipts compared to the prior year to be at least 80%. So what did I just say? If quarter two 2019 was 30,000, okay, and you're doing 10,000 for the quarter, well then now when you go into quarter three and you're comparing that to quarter three of 2019, let's just say that quarter three, it had also 30,000 of gross receipts in third quarter 2019. So if in third quarter, someone's got it up to, well, they're doing 20,000, okay, well, they're still going to get the credit. So until that employer comparatively hits that 80%, they're still going to get this credit, or if they are closed. Now, on that, move this down, okay? Couple of caveats here. If the employer has over 100 employees, then they're only going to get it for the employees that they're paying that are not working, meaning they're not working at home, okay? So the employees are out because they've closed, or the employees are, well, the business closed here, well, they wouldn't be working. So on this right here, this is the second parameter. More what I'm saying is this right here is only going to apply basically this. If someone is home, that's what this is saying. If you have over 100 employees and someone is at home, one of the employees are at home, but they're actually working, you're not going to get the credit, okay? They have to be not working to get the credit. So this wouldn't even apply to that, okay? Now, as it relates to the 100 or less employees, basically if you're closed and the employee's home and you're still paying them, you're going to get that credit, okay? So this would be more your gross receipts are down, okay? And you haven't closed, right? So you don't have to worry about, well, but what if I didn't close? Think of it this way when we talk about an either or here, right? We're talking about either or, okay? Your business is closed, okay? If you have over 100 employees and they're home working, you're not getting the credit. Your business is closed and you have over 100 employees and the employees that are not working still getting paid, then you get the credit. Your business is closed, you have 100 employees or less, working or not, you get the credit, okay? Now, if you have a 50% receipts, okay, people are working. That's what this is covering, is that they're working and you're still getting a credit, okay? Let me walk through this, the credit calculation here. Pretty neat in terms of the